The housing market has gone through a lot of change recently, and much of that was the result of how quickly mortgage rates rose last year, more than doubling in just a short period of time. Now, as we move through 2023, there are signs things are finally starting to turn around, right? Home prices are now a little bit more affordable, and mortgage rates are coming down, inflation is easing, and the overall market activity is starting to pick up. All of that is great news for the housing market this year. Christian Derides, Deputy Chief Economist at Moody's Analytics, says the current state of the housing market is that it is certainly in transition. Susan Wachter, Professor of Real Estate and Finance at the University of Pennsylvania's Wharton School, says housing is going to ease up. I think 2023 will be a turnaround year. Lawrence Young, the Chief Economist at the National Association of Realtors, says mortgage rates have fallen in the recent past weeks. So I'm very hopeful that the worst in home sales is probably at an end. Robert Deitz, Chief Economist and Senior Vice President at the National Association of Home Builders, says, it appears a turning point for housing lies ahead. In the coming quarters, single-family home builders will rise off of cycle lows as mortgage rates are expected to trend lower and boost housing affordability. So in this video, we're gonna go ahead and see if these economists are correct, right? We're gonna take a look at all of the key indicators that I analyze to understand where the market might be going over the next 90 days. But before we get into it, if you want to keep up with everything about the San Diego real estate and housing market, then make sure you like and subscribe to our channel, and don't forget to hit that notification bell. Hey guys, my name is Jesse Morrison, and we offer a proven and repeatable home sale process that's backed by client results, adding up to 18% more money to your bottom line than traditional real estate agents. If you'd like to protect your family and your finances through the home sale process over the coming months, just reach out. All my contact information is in the description below. All right, so the first graph I want to share with you guys is the days to sell. This graph indicates, how long it typically takes to sell a detached house here in San Diego County. All right, and these green arrows here represent the months of January to June. And what we can see is that over time, homes gradually sell faster and faster as January approaches June, right? And then during the remainder of the year, you can expect homes to not sell quite as fast, right? They will usually come up a little bit and take a little bit longer to sell. Actually, look at this one. From June to January, homes actually take a lot longer to sell, right? And right now, that's what we just did. So right now, we're currently at about 30 days is what it takes to sell a house here in San Diego. So in the months of February to April, these next 90 days coming up, we are basically at the beginning of the seasonal cycle where homes are going to start selling faster moving forward. Okay, so the next graph I want to go over with you guys is the sale to list price ratio. Okay, this indicates what buyers are willing to spend with relationship to the listing price for detached houses here in San Diego. So, in other words, if a buyer wants to pay more than list price, they will buy a home above 100%. And again, if they're gonna, on the opposite side of, if it sells for less than list price, the sale price will be less than 100%. And as you can see, again, in the yellow or in the green arrows, indicating from January to June, buyers typically get more and more aggressive as January approaches June. And then as June goes to the following January, that's when things kind of level off or even take a dip, right? And what we can see here is we are, in our current situation, we are in that dip that we normally see during the seasonal time. Currently, we're selling at 97% of the list price here in San Diego County. And we're at the start of the cycle where buyers start getting more aggressive moving forward. So in the months of February to April, we can expect to see buyers start getting more aggressive moving forward. All right, so this next graph is cyclical values. Guys, so this graph indicates what season values typically go up, down, or stay kind of flat or go sideways, right? And from January to June, again, that's when values typically take that step up, right? And then from the June to the following January is when things level off or even come down a little bit in prices. Okay, so at an $847,500 median sales price where we're at currently, we are at the beginning of what should be an inclining cycle. So in the months of February to April, we should see values starting to climb up moving forward. This next graph is the supply and demand, okay? This shows current economics, right? Supply versus demand as it relates to inventory, right? And how we measure inventory in real estate terms is how long it takes to deplete the market of homes for sale that are currently up for sale. So if there's 100 houses for sale here in San Diego County at any given moment, or on average 25 homes sell every month, it would take 4 months to deplete that inventory down to zero. So at that point, we would say we have a 4-month supply. Now check it out. The magic number, guys, is 6 months. So whenever inventory picks up above 6 months, we are entering into a buyer's market. And when it's below 6 months, we are in a seller's market. And we have been in a seller's market here since 2012. Right now, we are at 1.1 months of inventory. And although it doesn't seem like it, we are actually in an extreme seller's market according to this supply and demand graph. All right, so this next graph is values related to inventory. Guys, I took the same timeline as the previous one we just looked at and kept the same color codes, right? So every time we were in that seller's market where the inventory was below 6 months, I've highlighted in green. And when we were above that 6-month line, I've highlighted in red. And so you can see what values do when inventory is at a seller's market or a buyer's market. So again, here, check it out. So in a seller's market, values go up, and in a buyer's market, values come down, up, down. And we've been, like I said, since 2012, we've been in that seller's market, and we've seen prices continue to move up. And we're gonna stay this way, or at least we should continue this trend until we see inventory go up beyond 6 months. All right, so what affects inventory levels? And that's gonna be affordability, guys. That's the graph that we're gonna look at now. And this is super important because affordability, this index measures what percentage of the population can afford to buy a home based off of median household income, current market, home values, mortgage rates. All these different things come into play when they look at, what percentage of the population can afford to buy a home. So when the mortgage rates jumped up this last year, that's why we saw affordability. It went way down. Look at here, according to this graph, the third quarter 2022, 39% of Americans could afford to buy a home. And in California, that dropped down to 18%. Those numbers are extremely low. And this is the key metrics to keep in mind. That's going to be the leading indicator of what happens next. Recently though, because prices have come down and mortgage rates have come down, the next time they release this data, we should see affordability a little bit higher, which will give us a little bit more safety net to continue to keep those inventory levels low so we can stay in that seller's market where values continue to rise. But in the meantime, guys, in the next 90 days, unless anything changes dramatically, we should continue to be in that upward trend. So I agree with those experts, macroeconomically speaking, and I also agree with them micro level thinking, just by looking at those seasonal trends and where we're at in today's market. If anyone you care about can benefit from this information, please just make sure to share this video using the share button below. Again, my name is Jesse Morrison, and we offer a proven and repeatable home sale process that's backed by client results, adding up to 18% more money to your bottom line than traditional real estate agents. So if you'd like to protect your family and your finances through the home sale process over the coming months, just reach out. All my contact information, again, is in the description below. Otherwise, if you're just looking for more information, then I strongly suggest that you check out the next 2 videos that we're going to put up on the screen, because these are the videos that YouTube thinks that you should watch next.